we've got some major action in the currency markets to talk about today, specifically with the US dollar and the Swiss franc. The USD-CHF pair is making a significant move, dropping to a level we haven't seen in a very long time. It's approaching that psychologically important 0.89 mark. So, what's driving this big slide? Let's dive in. The main story here is the broad-based weakness in the US dollar. The dollar index, which measures the greenback against a basket of other major currencies, has been taking a nosedive. Several factors are piling on the pressure. A key one is the shifting expectation around the Federal Reserve's next move. Investors are increasingly betting that the Fed is done with its interest rate hiking cycle and might even start cutting rates sooner than previously thought. This change in sentiment makes holding US dollars less attractive compared to other currencies. Another piece of the puzzle is the recent economic data coming out of the United States. We've seen some reports that point towards a cooling economy. When signs of economic slowing appear, it reinforces the idea that the central bank won't need to keep monetary policy as tight, which again weighs on the currency. Think of it this way. If the economy's engine is cooling down, you don't need to keep your foot on the brake as hard. That's the logic the market is applying right now. Now, let's flip over to the other side of the pair, the Swiss franc. The franc is traditionally seen as a safe haven currency. This means that during times of global economic uncertainty or market volatility, investors often flock to it for safety, which drives up its value. While the current move is largely a US dollar story, the franc's inherent strength provides a solid foundation, amplifying the downward pressure on the USD-CHF pair. The Swiss National Bank's policy and Switzerland's stable economic footing also contribute to the franc's appeal. So, with the USD-CHF pair testing these multi-year lows near 0.800, what should traders be watching for? This 0.8200 level is a huge psychological barrier. If we see a decisive break below it, it could open the door for even further losses for the dollar against the franc. However, we could also see a bounce from this level. As some traders might see it as a buying opportunity, expecting a short-term correction. It's going to be a fascinating battle between bulls and bears right at this critical juncture. Keep a close eye on upcoming US inflation and jobs data, as those will be the next major catalysts. That's a wrap for today's market update. It's a pivotal moment for the dollar-franc pair, and we'll be here to track all the developments. If you found this breakdown helpful, please hit that like button. And don't forget to subscribe and turn on notifications so you never miss an update. Thanks for watching, and I'll see you in the next video.